So you're building your new dream home and the bank comes to you and says, hey, you need to go get hazard insurance. Okay, now what? Hey folks, I'm Eric Lonsinger with Insurance, and today I'm going to help you figure this out. Okay, first things first, what is hazard insurance? Well, technically speaking, in the insurance world, there's really no such thing. When banks refer to hazard insurance, it's usually in the context of buying or building a home, and when you're building, the type of insurance they're referring to is actually a builder's risk policy. Now here at Insurance, we write a lot of builder's risk policies, and we tend to hear a lot of the same questions and concerns pop up. One of the most common questions is, how long is it going to take for me to get coverage? Now the answer of that is going to vary depending on who you're working with and how experienced they are, but as an example, we can typically get a policy out same day. Before we get too far into more questions, let's back up a minute and talk a little bit about what builder's risk is. In its most basic form, it provides coverage for the total cost to build your home, including the materials, supplies, equipment, labor, and overhead. If something should happen that results in damage or delay, then the policy will kick in and provide coverage. Think of it like this. The policy looks at the total cost from the time you put a hole in the ground until the time you put a key in the door. That's the amount it can cover if something goes wrong. Now, as you may have experienced, it's common practice for lenders to require this coverage during the course of construction, which is actually a reasonable ask. Banks tend to want to avoid situations where they're lending out money without an asset to secure it. And the home you're building is not an asset yet because, well, it hasn't been built. This coverage helps ensure that it will be built, even if something goes wrong. Beyond the bank's requirement, builder's risk is simply an affordable way for you to protect the investment you're personally making for the same reasons we just mentioned. Now, some of the most common questions we get are the what ifs, meaning what if this happens, will the policy cover it? In the interest of time, we're just going to talk about a few of the most common, which are what if materials are stolen from the job site, or what if the home is vandalized, or what if materials are actually damaged in transit or in offsite storage? Will builder's risk cover these? Well, coverage may vary slightly from company to company. Generally, the answer is yes to all three of those questions. I know you may have other questions, so feel free to reach out or drop a comment below and I'll do my best to get you an answer quickly. So now you know what builder's risk is, let's talk about how to get it. There are two key pieces of information you're going to want to have handy to get going. First is an honest estimation of your total construction costs. If you don't know them already, then your builder can usually help you come to a figure. Keep in mind, this is only the cost to build the home, not the cost of the land or the market value once the home is finished. Remember, we're only insuring the cost to actually build it. Now, I want to spend a minute here since this one is crucially important. Builder's risk policies carry something called 100% coinsurance. What that means is if you underinsure your project and experience a loss, your coverage will be prorated to reflect that. Let's take a look at a quick example. Let's say the real total construction cost of your home is $400,000, but on your builder's risk policy, you state that it's $200,000. So we're only insuring 50% of the actual cost. Now let's assume you experience a loss. All the lumber on the site catches fire and it's gone. The builder says, hey, it's going to cost $50,000 to replace it all. No problem, we have $200,000 in coverage, right? Unfortunately, no. This is where the coinsurance kicks in, and it says because you only insured 50% of the actual cost, the $400,000, your policy will only pay 50% of the loss. So in this case, it will cover $25,000 of that $50,000 in lost lumber, meaning you're now out of pocket another $25,000. Long story short, it's important to get the numbers right. The second piece of information you want to have handy is your timeline and how confident you are in it. Some insurance companies will only write policies with 12-month terms, meaning if you go into month 13, you have to buy a whole other year. Others provide flexibility on duration, so your needs will dictate which makes the most sense. There are, of course, many additional details, options, and considerations that a good insurance agent will help you navigate. For example, if you're dealing with a renovation, there's a whole other set of considerations that come into play, and we're actually going to be posting a video on that topic next, so stay tuned. As a next step, it's important that you work with an agent who is experienced in this area. And if you are looking for someone to help, we here at Insurance would be happy to assist you. So thanks for watching and best of luck on your project.